always going to show on those credit karmas or the consumer credit reports, because they're much different than an actual mortgage credit report, because ours is more detailed. Things will come in that not necessarily would attach on a consumer's credit report. So that's the big one. Another one is about seasoning for cash. Sometimes people don't realize how much they're going to need for closing, so that gives them time to save up more for the down payment. So that's another big reason to do that. And just so that they have a really good idea and know comfortably what they can afford, and then they can start kind of doing their due diligence and looking around in the area.
Let's talk about that. So for an example on that credit report, that is very interesting that the credit report that you pull is different than on Credit Karma or one of the online free reports.
Right.
So they go into a little bit more depth. And in today's age, I hate to say this, but it's the truth. You don't know, maybe your identity's been stolen.
Right.
And you need to know that. And you might not even know that unless somebody pulls a real in-depth credit report. Right. And you're going, wait a minute, I don't have those credit cards.
Right.
I don't have this, because that's going to make a difference on whether you qualify for a loan if you've got all these credit cards that aren't yours.
Exactly.
And it gives you time to get yourself back into the right position for your own credit.
Correct.
The seasoning, we always laugh about that. I always like that, seasoning your cash. Almost sounds like a cooking show, doesn't it? But seasoning cash, explain how that word season, what that actually means.
Well, one of the things that we do as a lender, and all lenders do it, is we get 2 months of bank statements once you start doing the loan application. Within those 2 months, we are going to look for any large deposits that cannot be accounted for. And the three main reasons is, well, the U.S. Patriot Act, because we're tied to that. So they're looking for any kind of funny money. And then the other...
funny money. Seasoned and funny money. Yeah. We love it. Okay.
The other big one is that you cannot borrow money for your down payment. So a lot of times people think I can do a cash advance on my credit card, but you can't, because it's really not your money. Credit card revolving credit is not your money. If you borrowed against your own retirement, that's a different story. And that's another great reason why we at Certified Mortgage recommend that we talk to them 3 to 6 months ahead of time, because we don't just look at the mortgage. We're going to look at their whole financial picture. And sometimes we might look at the credit report and advise them to maybe pay down a higher interest credit card versus using that towards their down payment. And or if somebody was thinking of doing, withdrawing their whole 401k, that's not something that we always recommend. So we might, kind of advise them based on looking at the whole picture for them.
Well, going back to the seasoned money, that just to tell it in a different way, that means that you want to see that money's been there and is traceable to something. So if all of a sudden you're looking at bank statements and you see that, gosh, it was $20,000 deposited in here, and they go, yes, that's what we're going to use for our down payment. You've got to know, well, where did that come from? Because,
correct.
They're looking. The federal government is looking for funny money. Are they drug dealers? What are they doing here?
Exactly.
So you've got to set. And they say, "Well, I sold a boat." Okay, so you get the receipt. You see that
exactly.
But if they're just about ready to write a contract, and all of a sudden they're going for a mortgage, and that there's that money, and you haven't had time to see it in a bank statement for 2 or even maybe longer, that might hold up the entire closing or the whole contract, really, until whether it's your company or any company, they're going to want to see, hey, where did you get the money to put down?
Correct.
And if it's a gift, that's a different story.
Right.
And that may or may not be acceptable depending on the type of loan.
Right.
But they need to watch us. It's
because
a big brother.
Yes, a gift is perfectly okay, but again, you have to start to trail that. So now you need a gift letter, and then you have to get proof from the donor's account. So just like you were saying, if you're waiting kind of for the last minute, and now we have to deal with trailing money, it can add in a couple extra days.
Exactly. A lot of people just don't know that, and those are those little things. Now, also, just to kind of give you a little bit more credit here, Carolyn, as far as how you position your clients on the phone. If I go into, again, the First National Bank and they want to take my application and I take it and they go, you're denied, they may or may not want to educate me on the reasons why I was denied. You're going to up front find out from people a little bit more about what their plans are. You're going to ask questions like perhaps the car loan. That's always our big ticket, as that car loan, because if they do have a car loan and give us the stipulations, it's what, 10 months or
less than 10 months.
10 months. So I have a car loan and it's a year. I have a year on it. That's going to count against me as far as debt ratio.
Correct.
And maybe or maybe not, that banker's going to tell you that, because they're not there to help you get the loan. They're only there to have you fit into their, square peg and square hole type of thing.
Right.
So one of the questions you're going to be asking them is, if you have a car loan and they say yes, you're going to say, well, how long do you have left on it?
Exactly.
So for an example, if I only had a year or even 14 months or 15 months, whatever I could afford to buy down, and you said, gosh, if you can get that loan down to 10 months or less, it doesn't count.
Correct.
So I might go ahead and pay 3, 4, 5 months of my my car loan payment,
right,
so it doesn't count for my debt ratio.
Right. And that's another great example of why you should do it well in advance.
Exactly, because you wouldn't know that.
Right.
Now,
and then it would give us time to reflect once you pay it down.
Oh, reflect? Do we get
yes,
to reflect?
we need time.
We need time to reflect.
If you do a large portion to pay it down, then what we would do is do a credit refresh to show that now the balance is less than 10 months remaining. So we don't have to include it in a debt ratio.
And that's just one of those little tips. Little tricks. The other little, they're not really tricks, but they're
you're
the
true.
things.
Right.
They're what that need to be done, but people don't know about them. Tell us about the 30% on credit cards.
Okay, so a lot of times
I love this one.
I know, it's kind of, I really wish they would tell us as consumers. So what happens with credit scores, and this can make a really big difference, is say, for example, you have a credit limit of $1,000 on your credit card. So you think you're fine. You can go up to and spend up to $1,000, which you can. However, when we exceed 30% of our allowable limit on our credit, our revolving credit, it affects our credit score. It lowers it. So, for example, if you do have $1,000 credit limit and you don't want to have a balance no more than $300 on that particular revolving card. So a lot of times, too, what we can do is try to bump up the credit score if it's going to help put us into a different interest rate bracket or something like that by paying down credit cards just below the 30% instead of entirely paying them off and down. And you don't want to pay off old credit cards.
Interesting. But back to your $1,000. If I hear this all the time, I max it out every month, but then I pay it off. That's still not necessarily good to have a max it and pay it off. Is it or isn't it?
Well, not if they're maxing it. But a lot of times I do the same thing. You use it and then you pay it off at the end of the month. But if you max it, it just depends on the snapshot in time on when that particular creditor reports to the credit bureau, because we all have to report once every 30 days. So if it's your credit card, it just depends what your balance was when that
they
credit.
Show that.
Exactly.
So in the case of, we've just said, if you had let's just say $1,000 maximum on your credit card, and you have you have $300 is all you're going to go up, because that's what we've said. You don't want to go over 30%.
Right.
But you somehow need $1,000 all the time. You're floating different things, or you need it. You're better off getting maybe 3 loans, $3,000 credit cards, and only have them at $300 each,
right,
as opposed to putting $900 or $1,000 on one.
Right. Or you could check with your credit card company to see if they can increase your limit. That's another way to do it too. So if you have a good payment history, most of the time credit card companies are going to want to increase your limit, because
and people forget that. You can call them and ask them to lower your interest rates and increase your credit.
Yeah, your limit.
Your limit.
Yep. Absolutely.
So those are the kind of things. So what if I'm calling you now? I'm interested. I've been listening to the show, and I say, okay, I'm going to call Carolyn at 321. I might as well say the number. Is that the primary one? It's
795-9103.
795-9103. I'm calling Carolyn, and I'm saying, Carolyn, I'm really kind of thinking about a house. What would be some of the questions you're going to ask me?
Okay, great question, Jean.
Or you're going to need from me?
Typically what I like to do is have an interview of about 30 minutes or so, just to kind of get to know the scenario, find out what the client is looking for, Are they a first-time home buyer? Are they a veteran? What kind of assets do they have? What were they thinking as far as the amount of money that they wanted to put down or put into the whole transaction? And so not necessarily just the down payment, because it could include your closing costs. And also, one of the things that we really like to go over is the comfort level. What do you want as a mortgage payment? So your total household payment, what's your comfort level? And that way we can kind of backtrack it and figure out this would be your ideal purchase price based on some of those scenarios. And we're also going to find out about credit. We want to know, kind of what their history's been with credit. And as far as their situation, have they ever had a bankruptcy? Have they ever had a short sale? What type of income they have? How are you paid? How long have you been there?
Future income.
Yeah, exactly. But we put it all together so that we can look at numbers and talk together and work together and come up with how much you're going to need for down payment, what type of product's going to fit you best, and how much of a loan you can afford.
And all those ratios, debt ratios, are different based on conventional.
Correct.
The FHA, VA, also how much money you're putting down. Mm-hmm. So all of that takes into consideration. But one nice thing is you can talk, especially if they're a first-time home buyer, because although some of the veteran home buyers also make this mistake, they get so excited. Maybe they just got married or they just moved here and they're buying furniture and they're buying cars and all this stuff. So you can talk to them a little ahead of time and say, don't buy anything right now on time until you find your house.
Exactly.
Because once you have the mortgage, they don't check up on you every week to find out if you bought a car. But if ahead of time, they're going to see that, and it might throw your whole debt ratio off.
Right. And that's a good point, too, just to let people know for sure out there is, even though we get you qualified in the beginning and you're now going through the process and you get approved, don't do any new purchases until you are in the home, because we are always going to do a cross-check right at the very end.
Yeah, right there at the very
end.
And
it has
happened.
Stopped some closings.
Unfortunately, people get laid off right in the 30 or 45 days until closing, and they're going to check the day or two before closing, and you don't have a job. Or the new car. and that's when we want to kind of reprimand them, but we can't. We've got just a couple minutes left, but what are some of the qualifiers? What can people use as showing for income?
I would say probably the best tool for people to play around with is if you take your total gross income. So this is before taxes, before your 401k comes out. So your gross salary, and you times that by 44%. And you minus out any of your revolving debts, your car loan debts, your installment debts, any other property you might have, as well as if you do pay alimony or child support, and whatever's left, that would be your mortgage payment. And most of the time, it's going to be quite a bit more than what that consumer is more comfortable with paying, but that is the best way to run your numbers.
Well, before we run out of time, I want you to put in your phone number, or tell everyone your phone number and contact information again. That's Carolyn Wolf with Certified Mortgage Planners.
Okay, thank you, Jean. And my phone number is 321-795-9103. And my email is carolyn@floridalendingpro.com. And I did want to say, too, I can't stress enough how important it is to work with a great agent like Jean Newell here
Carolyn,
from Waterview Realty.
Here's your $10 for saying that.
It's very important. It's a huge factor in this whole transaction.
Well, what we usually talk about, too, when Jonathan is here, my broker, Jonathan Lack, he's also a real estate attorney with Lack & Lack Chartered in Indianapolis. He also owns Waterview Title Services and the broker at Waterview Realty. All three hats he wears, and we try to make sure we keep everybody on the straight and narrow and help solve those problems. So if you have any questions for me, you can always reach me at Waterview Realty, and you can also text or call me at 321-480-1574, or visit our website at www.yourhometownsolutions.com. That's our radio website. And we're here to help you find that dream home and make your problem solving. We're going to help you with problem solving your new home, refinancing, all kinds of things. We're here to, as I said, discussing everything from foreclosures to Feng Shui. Carolyn, it was a pleasure to have you in the